let's jump right into this explainer. We're looking at the incredibly fast-paced, high-stakes world of Forex prop firms. And look, if you followed this space, you already know it has absolutely exploded lately. I mean, there are dozens of new proprietary trading firms launching every single month, all of them promising these massive funding amounts and incredible profit splits. But here's the reality, and it's kind of fascinating. Only a tiny fraction of them are actually going to survive the year. Why? Because while the barrier to starting a firm might literally be lower than ever, the barrier to earning a trader's trust, it has never been higher. Today, we're breaking down the exact blueprint of how the most successful prop firms cut through the noise, scale up, and build lasting authority. Honestly, it all comes down to how you manage what traders see. Or, actually, what they don't see.
Think about the mindset of a trader for a second. They are, by nature, completely risk-averse when it comes to their own capital, right? They're constantly analyzing charts and data just to avoid pitfalls. So, in this industry, when a firm's social feed suddenly goes dead, traders immediately start to hesitate. They view the brand as unstable. It's exactly like walking up to a restaurant right in the middle of prime dinner hours and the lights are totally off and nobody's inside. You instantly think, wait, are they out of business? When a prop firm goes silent, traders do not give you the benefit of the doubt. They don't think, oh, they must be super busy working behind the scenes. No way. They assume the absolute worst. They start thinking payouts are delayed, or regulators are knocking on the door, or bankruptcy is coming. In a hyper-connected market like this, silence isn't golden. Silence is undeniably risky.
You've really got to ask yourself, if a brand vanishes completely between their promotional cycles, would you confidently trust them with your own hard-earned capital? Imagine handing over hundreds, maybe thousands of dollars in evaluation fees to a company that only ever bothers to speak up when they want to sell you something. It just feels so hollow and transactional. Traders today, they're looking for partners, not just platforms. So when a brand disappears for weeks at a time, that illusion of reliability, it shatters. Modern traders are highly educated, and they are deeply plugged into community forums and Discord servers. If you vanish, the community is going to fill that silence with their own speculation. And I promise you, that speculation is almost never going to be in your favor.
It's wild because we see firms making these exact same critical errors over and over again. They completely destroy trader confidence by only popping up to offer discounts. Listen, acting like you're running a perpetual going out of business sale just makes you look desperate for cash flow. Then there's media visibility, or the lack of it. Having zero presence outside of your own website basically means you don't exist. Add in weak communication and inconsistent updates, and you're leaving your traders completely in the dark about things like platform upgrades or payout schedules. And finally, if you have no authority positioning, you're just another generic face in a massive crowd. When you stack these mistakes together, you're not just stalling your growth, you are literally driving your most serious traders straight over to your competitors.
There is a really jarring contrast in how traders perceive these brands. Active brands project this powerful aura of safety. They're out there communicating, sharing success stories, updating their tech, popping up in industry news. They look well capitalized and confident. But those inactive brands, the ones that maybe throw up a post once a month, they look like a sinking ship, and the contrast is immediate. When a trader sits down to decide where to spend their evaluation fees, it isn't really a logical debate about who has slightly better challenge rules anymore. It becomes a deeply emotional decision based almost entirely on perceived safety. The active brand wins by default, simply because they showed up and kept the lights on.
So the takeaway here is a massive paradigm shift. Serious traders are not just hunting for the absolute best profit split. They are actively seeking out perceived safety. And that perfectly encapsulates the modern prop firm landscape. I mean, sure, an 80 or 90% profit split sounds amazing on paper, but what good is a massive payout structure if the firm folds before they even process your withdrawal? Traders have been burned way too many times by these fly-by-night operations. They are doing deep due diligence now. They want to see exactly how your firm handles itself when the market gets volatile. They are evaluating your confidence. If you can project rock-solid stability, traders will actually accept stricter trading rules or even slightly lower splits just because they believe their money is genuinely safe with you.
This brings us to a really fascinating redefinition. In the Forex space, announcements aren't just your standard news updates. They actually serve as trust infrastructure. I absolutely love that term. Think about the physical infrastructure of a major city, right? The roads, the bridges, the power grid. You probably don't actively think about them or applaud them every day, but without them, the whole city just collapses. For a prop firm, your consistent announcements, whether that's a weekly market recap, a quick platform update, or a quick interview with a funded trader, they form that exact same kind of invisible grid, but for trust. And that infrastructure has to be built and maintained long before a trader ever hovers over that buy challenge button. By the time they're actually ready to convert, your consistent presence has already wiped out their uncertainty.
So the big question is, how do we actually build that invisible grid of trust at scale? Well, the answer is public relations. PR totally changes the game. It allows you to stay visible, not just to the people already following you, but to the entire broader financial ecosystem. It builds massive credibility when a respected third-party news outlet talks about your firm's growth. It creates these vital authority signals. Think about it. When a trader Googles your firm's name to do their due diligence, they shouldn't just find your homepage. They should be hitting a robust search presence packed with articles, press releases, and industry commentary. That drastically strengthens trader trust. When major financial sites recognize you, the trader automatically assumes you're a legitimate long-term player. PR takes you from being just a localized participant to an omnipresent market authority.
You simply cannot stay relevant in a market this competitive by just existing. You stay relevant by constantly and strategically being seen. Existing just means you have a website, a basic trading platform, and maybe a Twitter account that retweets something every now and then. It's totally passive. And in a market that moves at lightning speed, passive gets forgotten instantly. Being seen is an active, even aggressive strategy. It means you are deliberately putting your brand right in front of traders. You're sponsoring events, you're dropping data-driven insights about the market, you're constantly showcasing your top traders. Being seen creates relevance. And relevance? That's the currency that buys attention, which ultimately translates into long-term loyalty.
Let's look at the mechanical breakdown of how PR actually transforms a business step by step. It's basically a predictable funnel. It starts with a simple press release, say announcing a new integration or a major payout milestone. That lays down a foundational layer of authority. From there, media distribution acts like a megaphone, blasting out widespread visibility across all these different financial networks. If you do this consistently, you build an unshakable track record of trust. And finally, all that accumulated trust naturally transforms into unshakable trader confidence. It is a logical, predictable machine that works every single time if you just execute it properly. The firms that are ultimately going to survive and win this space aren't just aggressively selling you a quick trading challenge. They are establishing a trusted, omnipresent market authority. This right here is what separates the billion-dollar valuations from the companies that quietly shut off their servers on a Friday night. Let's be honest, anyone can license a trading platform, slap a cool logo on it, and run a challenge. That's just a commodity. A brand, on the other hand, is an asset. A brand has a distinct voice, a real reputation, and a community of loyal advocates. The long-term winners in the prop firm space are obsessively focused on brand building because they know the challenge is just the product, but the brand is the actual reason people buy the product.
While all that flashy hype will eventually fade out, the solid trust generated by strategic visibility actually compounds, scaling your growth exponentially over time. We see these hype cycles constantly, right? Sure, you might see a massive spike in initial interest when a firm gives away a sports car or offers zero spread trading for a week, but hype is exhausting to maintain. And the second the keys to that car are handed over, those traders leave looking for the next shiny object. Trust, though, operates exactly like compound interest. Every article, every successful payout, every transparent announcement, it all adds a little bit more to your principal balance. Over a year or two, that compounding trust creates a massive moat around your business that no amount of competitor hype can easily breach.
Your ultimate takeaway from this explainer is to prioritize PR strategies that are designed for long-term visibility. Don't just settle for being another generic row on some trader's spreadsheet of prop firm evaluations. Build a prop firm that traders instantly recognize, that they respect, and most importantly, that they feel completely secure with. Because once you become the recognized standard in the industry, you get to stop competing on price and discounts, and you start competing on absolute authority.
So before you go and launch your next massive promotion, I really want you to ask yourself one absolutely crucial question. Are you just running challenges, or are you actually building a brand? Because your answer to that question will entirely determine if your firm is even still going to be here a year from today. Let us know your thoughts in the comments below if you agree that visibility builds confidence. Make sure to subscribe for more real data-backed growth insights, and we'll catch you in the next explainer.